Hello again. Hi, Assalamualaikum. Very good day to everybody. And today we are here again for episode 5 in my first ever premiere episode. With me is none other than my strong supporters. When I come back 3 years ago, he's there to give me a full support. And now I have him in this episode because his insight is basically important to our current chapter. Episode for today. Mr. Alex Lee. Let me introduce you a little bit about Mr. Alex Lee. I know him when he's actually reside there is CEO, Chief Executive Officer of FPAM, Financial Planning Association Malaysia, but now he already retired, fully retired what he called. He already resigned, so this is the former CEO. Mr. Alex, yourself, you have 36 years in the financial planning industry, and his niche is on financial planning, wealth management, life and general insurance, as well as unit trust. So Mr. Alex, thank you for coming and accepting my invitation as a guest host.
Thank you, Dr. Larwa, for having me for this evening talks. I'm more than happy to share my experience, all right, post-retirement.
Yes.
Because this is the subject that very close to my heart. I'm very passionate about it.
Yes.
In fact, a lot of my friends ask me, I say, Alex, why would you want to resign from FM and go into retirement?
What do you answer?
Well, I answer to them in this way. You see, it's important for us to have a purpose in life. Yeah. During my wealth accumulation stage, my single purpose in life is to ensure that I move up the corporate ladders to earn as much as possible to provide the comfort to my family members. And today, to a very large extent, I fulfill those objectives. All right. So
you want to know the tips? I think we will share it during the whole session.
Yeah. We can talk about it.
Yes.
At a later stage. Yeah.
Yes.
Right.
Okay.
Yeah.
As Mr. Alex said, you already give the hint that our topic today is about spending habit during retirements. Does it change before or after retirement, and how to sustain? Okay. All right.
Okay.
So that is the theme of today. We're gonna go through 3 steps. Okay. First, we're gonna identify how retirees actually spend differently before the retirement and after the retirement, and then we're going to talk about why actually this if overspending happen and how does it affect to the life. And last but not least, I think your valuable insights on how we can actually prolong this sustainable fund for life. Okay. So let me have an introduction a little bit, Mr. Alex, for the next. Oh, before that, don't forget to subscribe our YouTube and Spotify, and follow our LinkedIn, Facebook Live, and also Instagram. Don't forget to rate 5-star if possible. Okay, thank you so much. So let's go deep dive into the topic, Mr. Alex. Spending doesn't stop when you retire, of course.
Yes.
Yeah, everybody need to eat. Everybody still need to enjoy life.
Yes.
I would say in certain aspect. And I think it just changes from the fuel to your workplace, from the working attire to another level of expenses like medicals, because you're spending at home medicals, and then maybe some substantial. Everybody need to eat, so you need to eat foods. Okay, so basically that is why I think this topic is crucial for us to share. Before we go further, Mr. Alex, may I share a little bit about the facts that we find out? Okay, before that, do you know that in Malaysia, our life expectancy is 75 average?
Yes, about that.
Ladies, I think women live,
3-4
Malaysian
years
women,
longer.
76 years old.
Yes.
And men in Malaysia live up to 73 years old. Okay, that is a fact in 2023, yeah?
Yes.
And yeah. And okay, in Malaysia, EPF data shows that more than half of members, okay, use up their saving within 5 years of retiring. Maknanya you retire at 60, you finish your retirement, whatever fund that you work hard for, maybe $500,000. I think most of the Malaysians have $500,000 if you are working, our average now. Within 5 years, you finish $500,000. Alright, so that is something that is, I think, is worrisome for us. Okay, goes to my first point. Before we go to why this worry us that much after 5 years at 65, you don't have more money and you should live another 10 years after that. So that will be a crucial part. So before that, what make expenses during retirement and before retirement different? What do you think is the main difference?
Okay, let's put it this way. All right, before and after retirement, as far as the expenses pattern is concerned, definitely there's a differences. But the key point is you need to live your life with a principle, with a purpose. All right. So that means that when you plan for retirement, you need to ask yourself, what are you going to do after retirement? What is the thing that matter to you the most? What is your purpose? All right. So if after retirement, are you going to spend more time in running, traveling, hiking, or you want to learn some new skill, or let's say I want to learn more about cooking. All right, I want to do some gardening. I want to spend more time. Hobby. More time with your chuchu or whatever it is. You need to have a focus. You need to have a purpose. Once you have a focus and a purpose, then you know how are you going to spend your time. Then from there you estimate roughly how much do you need to maintain that lifestyle. Once you have made that decision, the next thing is, in fact, this is a very crucial part. A lot of people overlook it. You need to do a financial inventory checklist. You need to do a complete checklist. Exactly how much money do you have as of today? A lot of people, they don't even know. They just felt inadequate. They felt that, oh, always felt that not enough money. I probably live longer than that. And they become very kuduku, keep on saving money. All right. So rule number one is do a checklist. Look at your liquid assets. How much EPF balance you have. How much bank balances you have, fixed deposits. All right. How much unit trust investment you have. How much do you have money in foreign currency account? Do you have direct investment in stock and trade investment or not? Do you invest in those wealth management apps or not? StashAway, Versa, or whatever they can come across. Then from there you do a total calculation. Then you look at it. This is a liquid asset I have. Then based on this block of assets, how much interest dividend you can generate? Is it sufficient to support your current lifestyle? This is one part. But then you also need to look at your fixed assets. All right. You need to look how many property you have.
The maintenance, even though you already make payment also, the maintenance.
Correct. So you need to, but first and foremost, you look at the capital asset amount. All right. So based on the current market value minus the outstanding loan. Hopefully you already settle off.
Okay, let's say it's settled off. Still, the maintenance is there.
Correct, maintenance is there. Correct. So then you go into your expenses, right?
Correct.
So you have to look into your assets.
Correct.
Even.
So plan properly.
Do you have expensive watches? List it down. Do you have painting?
Expensive watches, maintenance as well.
Correct. Everything you go list out. So then you know that assets today, I have 1 million, 2 million, 3 million, total asset, how much in liquid, how much in fixed, because that is going to help you to plan and your wealth a lot more better, and it give you the sense of comfort that, I probably have sufficient to meet my retirement. If it's not enough, then you have to start thinking very carefully, because once you reach the age of 60, all right, your emotion attached to material things should be lesser. That means if you find that your liquid asset is not able to generate substantial amount, to maintain your lifestyle, you may want to let go some of your expensive watches,
if possible,
your gold coin, or even your second property,
correct.
to increase the base in order to generate.
You can find out a lot of data outside that is how much basically that we need for the 15 years remaining up to the longevity data that we said 75 years old. We can always know how much that 15 years coming up post retirement.
It all depends on individual. All right, some tend to spend more, some will spend less. But the key is after you've done all this, you see,
calculate one.
You see, people like me, I've done a lot in financial planning. I check my expenses. You see, you can go to Google Play Store or
there's
iPhone.
a lot of apps. That's what I'm asking.
Today, if I go out, I finish one cup of teh tarik, I will just key in 250. So that I know that as of today,
budget,
how much
budget.
Correct. How much I spend, so that you are able to know, are you in a positive position this month? If yes, you can reward yourself a little bit more. If not, you adjust it accordingly.
Correct.
Yeah.
That is something that I think Malaysian, I might be biased, but
Yes.
I'm here in Malaysia, so I can give only
Yeah.
Malaysia,
Yeah.
Malaysia example.
Yeah.
But a lot of Malaysia are ignorant with all these apps.
They are ignorant. They did
Yeah.
not track the expenses. They
Yeah.
also just felt inadequate.
Yeah.
Cukup,
And they
then
always thought like, oh,
Yes.
esok ada, don't worry, tomorrow.
Correct.
There's always tomorrow. But that is a problem, right?
There's a problem. Yeah.
Mr. Alex.
Yes, because if you
Yeah.
once you consult a financial planner and you know exactly, oh, I think I can spend up to 5,000. Then you use a check to monitor it. Then you're in a comfort position to know that, hey, today, actually this month I spend a lot more less. So I want to spend a little bit more. Because when you reach the retirement age, you got to take care of yourself more than any other person. You got to be fair to yourself. You got to start rewarding yourself a little bit more.
Correct.
You need to find a balance into this.
Correct.
You know, it's not about keep on saving money, worry that what if tomorrow, you know, that something happens, it's not sufficient. Yeah.
There is some expenses that we know. We
Yes.
know that it's going to happen, that we know
Yes.
we're going to face. Okay, let me move to another expenses that people are reluctant, especially retirees, is about medical bills, medical expenses. Can I share you again with the statistic that Malaysian retirees, okay, spend up to 45% of their monthly budget on medical related expenses. Some people who are not retired yet, they don't know these expenses actually. You thought that, oh, we are sehat, we have this, we have company insurance and so on. But less that they know that Malaysia retirees, okay, they actually spend 45 of their monthly expenses for medical, which is quite substantial. Half of their savings for medical.
Very substantial. I find it as good. I just
is it cheap for you?
No, I never spend.
Because you already.
No. Put it this way. I think people need to see things from a different perspective. All right. First and foremost, once you retire, you got to keep yourself active at all times, so that the probability of getting sick is much lower. All right, and it's important for you to even. A lot of people say that, oh, while I'm building my career, I read a lot of motivation books to keep myself motivated. But it is the same that even after retirement, you got to read the positive affirmation positively to keep you positive at all times, so that the probability of falling into sickness also less. So you see things from a positive perspective.
I know.
All right?
But what I'm trying to share here is there is like a contingency expenses that we actually ignore as a retirees. I think what retire people need to do is to keep back in mind there is a contingency expenses that happening when they are retiring. Am I right? Yeah.
Yes.
This medical is just from the statistic that saying that this what happened to most of the Malaysian retirees, that they spend 45% for their medical checkup or medical related without them expecting in. Meaning to say that there is a contingency expenses. Whereby I want to add another things. In 2022 also, study showed that 68 of Malaysia retirees still depend on their kids to support them. That one I think is the best place for you to do. Can we rely on our kids to support us? Yes
Okay.
or no? Yes or no?
It's not easy to answer this question, all right, to be frank, because I look at my children, all right, I realize that there are two sets of the story, all right. For those of us who are staying in KL, our children are a lot more luckier compared to those who are coming from outside Kuala Lumpur and working in KL.
Why you say that?
Why? Because my children, if they stay with the parents, they save the room rental income, they save the water and electricity, they save the Wi-Fi, sometimes the dinner also save. So in total, there's an additional 2,000 to 3,000. But
so
if
they can give it to us.
That it all depends. But they are in a much better fortunate position. But imagine if you are out of KL and you find correct, and then no, it's not unless. You earn the same, but you live in KL. You need to rent a house or a room. Your expenses will be much higher. So those are the group that actually sandwich in between. Why? Because they need to pay a lot more higher expenses. They need to support the family. Then in addition to that, they may even have to settle part of their university loan. So that will put them in a very difficult position. Yeah. So it all depends on which pocket and which segment of society that you're looking at. Yeah.
So basically what you saying that it's uncertainties, right? You cannot rely on kids. Even if they really wanted to help, but they can't.
it's not
because
going
of
to be
the
easy.
that's life
Correct.
status,
The
not
life
about
status, and then the housing loan
correct,
comes in, the
correct.
car
They
loan
also have their
comes in.
own life.
That's why
Yeah.
it's very important that you see, even during the accumulation stage, there are two parts of it. You know, when you talk to a planner, they keep talking about how much you can save, how much you can invest. But to be frank, how much you can save, how much you can invest is only one part of the story. Even though you have the discipline to complete it, the other part of it, you got to focus into income. You got to, while we are following, your financial plan, saving certain sum of money over a medium to long-term basis to achieve certain financial targets, you got to stay focused. How can you substantially move your career upwards?
Yeah.
How to ensure that your income will double up in the next 3 to 5 years? Because that is even more important than just managing the expenses alone. You got to both, so that when you reach the age of 60, you are in a more comfortable position to manage your finance than entirely depends on your children.
Okay. But what if you already 59 years old? Is it too late? But before that, I think we move to another second point. It's overspending in the early years of retirement. I'm not sure if you have heard this term about retirement honeymoon period, right? This term actually is used like, when you get your money, EPF money or gratuity money when you are 60 and you got a lump sum of 500,000, 500,000 ringgit Malaysia in your bank. So the feel of, okay, let me save later, let me spend first. That's what we call retirement honeymoon periods. I think, at this time, you want to renovate your house, you want to go travel here, travel there, give to your kids. Why not? So spending in the first 5 years, it's something that you say, oh, it's okay, I think I can afford this now. Later, I will be saving later, let's say, okay? Because I have a facts that follow with this, Mr. Alex, 40%, 40% of Malaysian retirees spend more in their first year of retirement than they did while they are working.
Yeah. This is possible because they don't have the financial disciplines. All right. You see,
this is habit, right?
This is habit. So when sudden lump sum money fall into your account, and you don't know how to manage it, and you don't have a life purpose, and you don't have an objective to guide you and to follow through, then you will fall into the trap.
Yeah,
all right? But if you know your life purpose, you know your objective, you know how much you're going to spend, and you have a checker to follow through the expenses, then you will not fall into that trap. So that is very important. Yeah, you should.
What do you think is the factors of they having this nantilah kita saving, let's spend first? So what are the factors you think that
I think it's a lot to do with the financial discipline and also the ego. Right? Some people feel good, someone has so much money, in the bank
I never
account.
had this before.
Never had before. I want to change a new car. I want to renovate my house.
Oh, renovate your house.
Then at the same time, and more damaging is that they start entertaining some business idea, business proposal from their family members, their children, or from outsiders. You're not supposed to. Why would you want to entertain business idea to enhance your return? Because you and I know that it's not going to be easy to do that.
And then there's also social pressure.
Social pressure,
I nak bagi kah kat anak-anak saudara, okay. You can, but you need to know where you stand, right?
Yes, exactly. You need to know where you stand. You should not go beyond that. And if you want to support your house renovation, you want to support the student education, it should come from your fixed asset. It means you must liquidate some of your asset to support it. If you don't have it, then don't do it.
Betul.
You still cap it, your objective in that perspective. Yeah.
So what you want to say, okay, first before we go for the third segment, what you want to say to all these people who withdraw their money when they are 60, lump sum?
Okay. If
you can actually, but you need to know what to do, right?
If you ask me, all right, do not
take
withdraw. No, do not withdraw your EPF money. All right, because EPF give you options that you can draw down on a monthly basis.
Correct.
Yeah,
there is an option.
Yeah, you can go to the app and say that, transfer 2,000
or 5,000,
2,000, 1,000 per month, depends on how much you have.
Correct.
So that you can last as long as possible.
Use that.
Yes, you know why? Because 5-6% return is a very high rate of return.
At the moment, yes.
It's almost, it's there.
Yeah.
You know, other than fixed deposit, there's no other products in today's market that can generate that kind of return to you. Yeah.
Correct. You can withdraw, but again, let me share with you. You can withdraw, but you don't want to fall in this statistic, Mr. Alex.
Yes.
Over 50% of them admit that they had not structured plan on how to manage their money. So if you don't have the structured plan, better take the option that EPF already provided to you.
Exactly. You know, I mean, to put it this way, if you ask me, all right, what structured plan are you going to have?
Correct.
All right. Let's put it the other way out. You know, even someone can come to you and say that, okay, you draw down $500,000, you put into this unit trust portfolio, can give you a say projected annualized return of 9%. But you need to understand, when I'm telling you this portfolio can generate 9%, it doesn't mean to say that every year, every month, every year you go 9%. No, it says that in certain years you will get more than 9. Certain year will get less than 9. But over a period of time, 15, 20 years, depends on the strategy you use, then you're probably getting 9%. But that's historical data. But are you going to repeat the same over the next 10, 15 years? Or we do not know. It may or it may not.
It's hardly happen that way in this current world, isn't it?
Correct. So
history don't repeat itself.
That's right. So when you go into investment, you need to know is exactly where the asset class goes to. All right, and why, you know, where you get the 9%? Is it over a 5-year period, 10-year period, 20-year period? The next is what is the standard deviation? It means with 66 percentage of chances of success or 90% chances, what is the range? All right, it's just I can tell you that this fund got project historic data 9%. All right, standard deviation based on 90%, probably within 2% to 15%. Are you able to stomach that? In every year it will fluctuate between that level, but over a long period of time we give you 9% based on historical data. But so they need to ask a very actual question. You got to get a truthful question so that they can make a right technical decision.
Okay. All right. So moving on to the third section is actually what actually in my book, my coming book that will be released officially this Wednesday, 30th July actually, 30th July. So in the chapter 6, Mr. Alex, I did write about sustaining financial fitness for life. And I talk about how we can sustain our life during retirement. All right. So how, Mr. Alex, to ensure sustainable fun in our life? Okay, you want to share something like practical strategies, all in all that we mentioned? Give me 2 at least. How we can maintain sustainable.
As I mentioned just now, all right. So
number
1 is, all right, you need to know exactly how much you are going to spend and whether you have sufficient money to support it, structure it. All right. If it's not, then you will see whether you have some fixed asset you can liquidate to expand your base in order to give you a higher interest rate and dividend return to support it. The other second is to diversify a certain portfolio. Diversify, all right, into a little bit more risky asset in order to enhance the returns.
Okay.
All right, but that portion must be able to hold it for long run. If hold it for long run, the risk is actually very low. Right? Look into it. Wealth accumulation, you take 20, 30 years. Your wealth distribution also will take 15, 20 years. So you don't have to worry because you don't have to draw down immediately. As long as you know the base that you have, you know, and you're generating a certain set of income, you know, and you let it flow through a long period of time, you should be more or less, you know, able to sustain it in a longer period of time.
Yeah, but I think all our audience is not everyone are finance background, have a finance background. Yeah, Mr. Alex. So if you need help, there's a lot of tools outside there that can help us. The budget apps from my beloved friend also, Key for Finori apps, and we also have EPF I Invest if you want to use that as an apps. And there's a lot of budgeting planner outside there. There's a lot of apps actually. And then there's lots of chat GPT also that we can refer. Don't rely, but at least you can have that as an option.
Just focus on one app, expense tracker. Just check your expenses.
Expense tracker.
Expense tracker. Just check your expenses.
No, this is not paid review, but
No.
This is not paid
review. Any app, any app that you able to check your expenses, so that you know as of today how much you spend and against your budget. You know, then you know as are you in a comfortable position to continue the spending or not? Because you are at a spending stage, you're not at a income enhancement stage anymore. So it's important for you to have the discipline to manage your expenses in the right perspective.
Exactly, correct. So before we move on to conclude our session, it was so time Time is so jealous of us,
Yeah.
Mr. Alex. So before we go, I think I would have a question that I would love to ask my beloved network here. For all those who have been retired, okay, what was the first thing you spent on after retirement? So I want to know, because I really wanted to know what is the first thing that you spend on your retirement. Second, do you think you will spend more or less once you retire? Those who are about to retire, I think this question is for you. And last but not least, what one habit you like to change before you retire? Okay, so answer these three questions. I really appreciate your help, because we want to discuss this and kupas this further, dig this further. So, Mr. Alex, as a conclusion, many people doesn't realize that retirement spending is not spending less, right? It's not actually spending less. It's actually you need to spend differently. Correct? Do you agree with me?
I absolutely agree with you. Yes. Yes.
Okay. So overspending in early years doesn't help.
Yes.
So you need to be structured. It's okay, but not make it like every time, every month. I think no, doesn't make you okay. I think you should reward yourself constantly every year with the structure, right?
Correct. The key thing is this: before you spend, you got to look into your total wealth. Now, EPF transfer $500,000 into your account. How much the other wealth you have, asset you have? You know, you need to compare. If you think you can sustain it, then you reward yourself a little bit more on that. If you can't, then you got to roll back your decision.
Always know yourself.
Know yourself. Yeah, you know.
Always know yourself.
That's right.
So I think thank you, Mr. Alex. I think I will give you 1 minute later on for your last word. Thank you for everybody who's joining me today. It was a pleasure to have everybody in this session, because I think this is a crucial. I mean, we don't want to discuss it when you already retired. We want to discuss this about or at least a plan for you to have a plan when you retired. There you go. Okay. So thank you again for watching me today, and it was a pleasure to have you. So if you think that this is valuable for your parents or your brother, sister who are retiring soon, do share this link to them. Don't forget my Spotify, Lalwa Rashad, my YouTube, Dr. Lalwa Rashad, my LinkedIn Live, Facebook, and also Instagram. I think all the social media, I try to keep up with the young generation, Mr. Alex. And don't forget to subscribe and star 5 as well. So I would like to thanks. Oh, don't forget my book, which already come out this Wednesday, tomorrow. It's coming out tomorrow, 30th July. So to buy it, you can go to www.lalwarashad.com. There's a few merchandise there. The most crucial is this one. Everybody grab this, because this is a limited. So thank you again. And I would like to thank my production team, Mr. Alex. They have done a good job with the producer, Yusri Zahid, assistant producer, Miss Norfatin Atika, my casting crew, Fatin Aishira, and also my makeup artist, Angelica Revin. Thank you so much for always with me every episode. So until then, final word from Mr. Alex Lee.
Oh, well, I just want to summarize it in a couple of points. As I said right from the very beginning, have a purpose in life. Know exactly what you want to do. Do a financial inventory checking, and you need to have a very strong financial discipline in managing your expenses. So if you are able to do this in a very proper manner, I'm sure that you will enjoy your post-retirement life a lot more better, and you're able to sustain your fund a little bit more longer.
You don't want to ruin your enjoyment.
Correct. That's
until the last breath. I think I got it. Okay, thank you so much, Mr. Alex. And don't forget to watch me every Tuesday 5 p.m. in Money Talk Podcast with the hashtag stay calm, don't rush, make a plan, feel the hush. Until next week, everybody, it's a pleasure to have you, Mr. Alex, and to have everybody in my network. So we meet again next Tuesday, 5 p.m. only on all the 5 social media I have around. So again, have a blessed day, have a beautiful life, and I'll see you next week. Money Talk. Assalamualaikum. Thank you, Mr. Alex.
Yeah, thank you.